Warren Buffett, arguably the greatest investor of all time, built a fortune worth over $100 billion, not through speculation or day trading, but through owning great businesses that generate consistent dividends. Today, we're uncovering how Buffett uses dividends as a cornerstone of his investing philosophy, and why he believes they're a key ingredient in long-term success. Before we continue, click the subscribe button and hit the notification bell so that you're alerted when we release a new video to help you on your journey to investment success and financial freedom. Also, remember, this video is for information purposes only. Always do your own research or consult with a financial professional before investing money. Now let's continue. Buffett's strategy has always been simple. Buy wonderful companies at fair prices and hold them forever. But what most people miss is that dividends play a crucial role in his approach. He once said, "The real power of investing comes from the compounding of retained earnings." That means when a company uses its profits wisely or pays them out as dividends, you win either way. Buffett isn't obsessed with every company paying dividends. He's obsessed with owning companies that can. Why? Because consistent dividends signal financial strength, discipline, and shareholder focus, traits that separate great businesses from the rest. Let's talk examples. Coca-Cola, stock symbol KO. Coca-Cola is one of Buffett's best-known investments and one of his most powerful dividend machines. He bought Coca-Cola shares back in 1988 for about $1.3 billion. Today, Berkshire Hathaway receives over $700 million every year in dividends from Coke alone. That's more than half of his original investment every single year, just in dividends. And it's not just Coke. He also owns American Express, Chevron, Occidental Petroleum, and Kraft Heinz, all high dividend or dividend-growing companies. Buffett's strategy here is clear. Buy companies that not only generate cash, but return it to shareholders consistently. Buffett doesn't rely on selling stock to make money. He relies on the companies he owns to send him money. He often reminds investors, if you own a business that earns good returns, time is your friend. Dividends provide that steady stream of income while letting the underlying value of your shares compound quietly in the background. For Buffett, dividend payments are proof that the company's business model works and that management respects shareholders. Unlike speculation or short-term trading, dividends create a predictable feedback loop that rewards patience. You know, Buffett often talks about compounding as the eighth wonder of the world. Reinvesting dividends can double or even triple your long-term returns. Consider this. If you invested $10,000 in the S&P 500 back in 1980 without reinvesting dividends, you'd have around $1.3 million today. But if you did reinvest those dividends, your total would soar to over $3.5 million. That's the quiet magic Buffett mastered, letting time and reinvested income do the heavy lifting. Here's something fascinating. Buffett doesn't just own dividend-paying stocks. His company, Berkshire Hathaway, has become a dividend-collecting powerhouse. In 2024, Berkshire earned over $6 billion in dividend income, mostly from just a handful of companies. That income gives Buffett the flexibility to reinvest in new opportunities without selling assets or diluting ownership. In other words, dividends fuel his empire's growth. So, what can we learn from Buffett's dividend approach? Own quality businesses, not just high-yield stocks. A high yield means nothing if the company can't sustain it. Think long-term. Buffett has held some of his dividend payers for over 3 decades. Reinvest your dividends whenever possible to maximize compounding. Focus on consistency, not flash. Slow, steady, and reliable always wins over time. As Buffett famously said, our favorite holding period is forever. And when you're earning growing dividends forever, that's the real definition of investing success. Warren Buffett has proven that dividend investing isn't just about collecting income. It's about building wealth through ownership, patience, and discipline. If you enjoyed this video, we bet you'd like the 2 videos now appearing on the screen. Click on one of them right now, and let's continue this exciting journey together. We'll see you soon.